This is Cashology by FMBO, a podcast devoted to the art and science of managing your money. It's like school, but your only homework is living your best financial life. Class is now in session. Hello and welcome to the Cashology Podcast. I'm your host, Juli, and today I am especially excited for today's topic. We're going to talk all about credit scores. The reason why this is such a special topic to me is because I think I field a question about credit scores at least once a week from one of my friends, mainly because I work for a bank and they want to know more about it. Today, I'm extremely excited to welcome Wes Minton, a personal banker at our branch on 132nd and Center, to tell us more about credit scores. Welcome, Wes.
Well, hello, Julie. Thank you for having me today.
Of course. So I know you've been with FMBO for 8 years. Can you tell us a little bit about what you do as a personal banker day to day?
Yes, I open up accounts. I do applications for credit cards. I do applications for loans, home equity lines of credit. I do maintenance on accounts. I do a lot of things as a personal banker, but whatever I can do to help the customer, for sure.
Yes, you are definitely the face of FMBO. You are in front of the customers day to day, and I'm sure you've answered quite a bit of questions regarding credit scores, right?
100%. As you said, you field those questions on a day-to-day basis. I definitely do it, probably more than 4 or 5 times a day, just on credit scores alone.
Yeah. I mean, that's why this is such an important topic. So many people see a credit score as a mystery number. And, today we want to get to the root of it. We want to give everyone all the information they need to understand what that number is. So, Wes, can we start from the beginning? What exactly is a credit score? I mean, I can tell the listeners that the bigger the better with a credit score, right? It's not golf.
No, 100%. The higher your credit score, the more you're able to get loans, to get a mortgage. It's a very important number to have. And when I'm going through this with our customers, I deal a lot of people in high school and up into college. And so that's a perfect time to start learning about credit. And then also, when you're 18, it's something to discuss with your parents to start building credit early. And usually that's with a credit card or something like that, a loan with the cosigner, of course. So important to get that credit score as high as possible. And the range is, there's a certain number that comes along with the credit score. And that's can range anywhere from 300 to 850. Normally, a good credit score is somewhere in the 720s and higher is considered really good. And then, below that is not horrible, but if you're above 720, you're doing pretty good.
I think you hit on a really important topic, which is the different facets of your credit that play into your credit score. One thing you mentioned is your credit history. So when I look at my credit score, and I pretty regularly monitor it because I'm a total geek when it comes to my credit score. I'm fascinated by this topic. But I find because I am younger, my length of credit history is relatively short because I didn't have a credit card or any line of credit until my mid 20s or so. So
Sure.
That's the most impactful piece to my credit score. Can you talk about the different facets of the credit score and how it's calculated?
There's a lot of things that go into building up your credit score. One, of course, is what you mentioned, the length of credit. I had just got a new credit card this year, and it actually dropped mine from above about 12 years to down to 8. So the longer you have of length of credit score is a very important factor. They weight these factors higher on some than others. The length of credit is not weighted as much as some of the others. I don't want to get into percentages or whatnot, but that's probably one of the lower ones. The two most important factors of building up your credit score is the amount of credit that you have compared to the amount of debt you have on that credit. There's a ratio that goes along with that if you're above 50%, then that's not good. So if you have $1,000 credit card and you're filling up using $500 or more of that limit, then that brings down your credit score. Ideally, you'd like to be underneath 10% of your credit score, or excuse me, of your credit card limit. The easiest way to do that is to pay off your credit card every month, just in full. That should just be the best plan of action. That actually takes care of a lot of the factors that you're looking for. So if you have $1,000 limit on your credit card, you don't want to have a balance of above $100 consistently on there.
Credit utilization. That's the equation.
Yeah.
So basically, to a lender, that would mean that of the credit extended to you, you're utilizing 50% of it, which to a lender may look as a negative thing, as if you don't have the liquidity to pay for items without seeking credit for it. So that's why that is an important factor in your score. Is that correct, Wes?
Yes. So that takes a large part of it. And the other main important factor is, of course, making your payments on time. If you want to weigh them actually in order, it'd be making your payments on time. Credit utilization would be the second. And then we can get into the couple other ones that are listed. But if you make your payments on time every month, even if you're not paying it off in full, that just marks it that you've taken care of your obligations to that credit card. So once you get your credit report, you'll just see a little mark in there that says okay or a check mark to say that you've paid that credit card or that line on time. So that's a very important one to always do that. And I purposely set mine up where it automatically takes my payment in full out every month. So I don't have to worry about that.
So we've talked a lot about credit cards, and that's obviously a big factor for your credit score because lenders, card issuers look at your credit score in order to figure out if they're going to approve your credit card or if they're going to approve you for your credit line. Wes, can you talk to us more about other types of credit scores, how they're used? I mean, maybe for mortgage or other loans.
Yes, of course. Credit score is used for any type of loan you get, an auto loan or a mortgage or a loan that you just signed with just your signature that is called a unsecured loan. If you were to get an auto loan or a mortgage or let's say a motorcycle loan or something like that, that would be considered a secured loan. You have something to secure that loan, which would be an asset that has a value that we could loan money against that. The other one is the unsecured loan, which is pretty much you're taking that money and signing for it, and your signature is guaranteeing that you're going to pay that back. So, auto loans, mortgages, all those, in addition with a credit card, you need to get a good credit score. And a credit score, well, it determines what your rate might be or what your terms might be. If you have a higher credit score, the lower that your interest rate will be on the loan. If you have a lower credit score, usually creditors will have a higher interest rate. So you're paying more interest over time on these loans.
That makes a lot of sense, Wes. So essentially, your credit score can tell a credit card issuer whether or not you're approved for the loan, what the credit limit will be, or a lender for a personal loan or auto loan, what the rate may be as well as the loan amount. So there are a lot of different things that credit score does drive when it comes to looking for a loan. So Wes, you had mentioned the 4 C's. I'm really curious. I've never heard of this before. Can you tell us more about it?
There are 4 C's of credit, sometimes an additional fifth C, but I'll go over the four and we'll get into that. So the 4 C's are character, capacity, capital, and collateral. With character, that's pretty much your credit history, how long you've had credit, how long you've had a loan, or how long you've had a credit card. As Julia said, she didn't start her credit until she was in her mid-20s, so her credit history isn't as long. So that goes a lot with the character of your credit. The capacity is your ability to pay back that loan. They look at your debt-to-income ratio. So your debt-to-income is just kind of all your debt. So you take that, your monthly payments, and how much you make per month, And if you divide those, you get another ratio or percentage. And of course, loans are looking for a lower percentage with that, just like credit utilization. With capital, that's just the money that you make, the money that you're able to pay back on the loan. And then collateral, that's what I had mentioned before, with that being an asset that can act as security for the loan.
That makes sense. The 4Cs it's easy to remember when thinking about applying for a loan that you have to consider.
Yeah, for sure.
I'm curious, when it comes to monitoring my score, I think I mentioned this before. I'm a total geek about it. I check Credit Karma probably once a week to see what my score is. Yes, it's fascinating. It really is. And I really do encourage everyone checks out their credit score quite often. Can you tell us more about monitoring our credit health and give us any other tips that you have?
Oh, for sure. You had mentioned Credit Karma. That's a great free app that supplies you with tons of information. That's great. It mentions when you're going to do an update, so you'll see if your credit has moved. I check that every week, and usually on the update date because I'm excited. Also, on our website, fnbo.com, if you do have a credit card with us, we supply you with your FICO score. So that's another way to monitor it too. Obviously, if you pay your loans or your credit cards on time, that will obviously help your credit. So another way to monitor it is just to make sure you're making those payments on time. It's just so important. So there's tons of apps that you can do. There's our website. You can also get free credit reports online from each of our 3 credit bureaus once per year. So I always do that too.
Really great tips. There's also another factor of checking your credit score. Those are obviously self-service, free ways that you can check your credit score. When you do apply for a loan or a credit card and a lender does seek your credit score, Wes, can you confirm that is a hard pull on your credit and that impacts your credit score?
Yes, that's one of those contributing factors that it's a hard pull. They have a soft pull and a hard pull. When you apply for a credit card, they're actually pulling your score, pulling your credit, so they'll actually have a hard score in front of you. So that's 100% that they do that. And what's nice, if you ever get that hard pull done, then you're able to get a free credit report as well.
I didn't know that.
Yeah, we mail you a piece of paper and you're able to get a free credit score. Since we pulled it, that's kind of taking care of that. So then they take care of giving that to you.
Great.
Just to wrap it up, there are some main factors that are very important to your credit. Of course, the number one is your payment history. So make sure you make those payments on time. The second one is utilization. So again, make sure your credit balance is as low as you can have it compared to your limit. The other one is hard inquiries. So you don't want to apply for too many lines of credit. That will bring down your score. And the other one is the total amount of accounts that you have. So you don't want to have 10 credit cards and 4 loans out there. A creditor will look at that and say, well, might be risky if we might be number 15. So as a personal banker with First National Bank, I am more than happy to help you. All my peers are more than happy to help you. So if you have any questions, please reach out to us. We'd love to help.
Thanks so much, Wes. You've been an excellent guest. I cannot wait to send this podcast episode to all of my friends so I can finally stop answering their questions about credit scores.
I look forward to hearing it as well.
Thanks everyone for listening. Don't forget to subscribe and keep an eye out for more Cashology episodes coming your way soon. The Cashology Podcast, copyright 2020, First National Bank of Omaha. Member FDIC, Equal Housing Lender. Podcasts are for informational purposes only and not intended to provide specific advice or recommendations. When making decisions about your financial situation, consult a financial professional for advice. Podcasts are not regularly updated, and information may become outdated. Deposit products are offered by First National Bank of Omaha, member FDIC. Investment products are not FDIC insured, not a deposit or other obligation of the bank, not insured by any federal government agency, not guaranteed by the bank, may lose value.